whoever's volunteering, it has to be HD.
The N1 dude, I think,
Yes.
I mean, 4 people recording, so at least one needs to have it.
I'm also recording, right? But it's always better to prevent than cure. Prevention is better than the cure. All right. All right, folks. Welcome to the Q&A. This is taking into account all the questions I've received through myself, through Giuliano, through Rich, through Villa, through Adam. Right, those are the mods of the chat. These are the summary of the most important questions, and pay attention because it's going to be this session, and then not the next week, the week after, I'm going to have another session, which was not included in the course, but I will give it to you from me because I think you will find it beneficial. All right, so the technicals are fine, but more important than that is studying the mistakes. All right, study why traders fail, not why they succeed. Can you see my screen?
No.
All right. Can you see now?
Not yet.
All right. The format, folks, is going to be like this. Adam will read your questions, the most common recurring questions, and I will reply to them with a chart. All right. So, Adam, are you ready?
Yes, I am.
Share screen. Can you see now?
Yes.
All right.
Normally.
Let's
Yes,
start
yes.
with question number 1.
A question, the most asked question was I shorted above a high or I bought below a low and it kept going against me. Like nothing happened. It goes straight to my SL. Why is that?
All right. So, for example, you bought at this low, right? Because turtle soup, right? You've seen me do it all the time. So you bought here and it kept going down, right? This is a very common mistake to make at the beginning of learning turtle soup, which is trading the pattern, which is going back to any previous high or low, right? And just randomly buying or selling. That is incorrect. And that is what I saw someone in the chat do, right? You're saying I short an old high and it kept going higher. That's because you had an incorrect read on the higher time frame order flow, right? So the mistake is, or the sickness is, I shorted an old high and it kept going higher. Very common mistake. If it happens to you, don't worry. It happened to me as well before I learned the intricacies of turtle soup. And it will happen to anyone trying to learn at the beginning. And it probably happened at least once to every single one of you in the stream. All right. This reminds me of a saying, which is, the master has tried more than the student has failed. Right? So failure is part of the road to success. Now, the mistake is this. The solution or the reason why you made the mistake, and that is what you want to study. The reason, the fix, the medicine to the sickness is correctly following higher time frame order flow. That's a surface level answer. Now let's go deeper in that. As we know, the markets, we have trending markets, in a downtrending market, in a bearish market, in a selling program, right? Whatever you want to call it. Highs are rejected and lows are broken. Highs are rejected and lows are broken. Highs are rejected and lows are broken. Right? Why does this happen? This happens because you are trading a higher time frame key level. So the higher time frame order flow is bearish. Therefore, you don't look to buy at lows when the higher time frame is bearish. You look to sell above highs. Right? The trend is your friend until it ends is a true statement. It's a cliche, and it's a cliche for a reason. Right? So if the market is poised to go lower, you don't buy at lows. You expect lows to be broken. If the market is poised to go higher, you don't short old highs. You expect old highs to be truly broken. You expect distribution above old highs, right? This also goes back to manipulation versus distribution. You thought it was a manipulation when in fact it was a distribution. That is the technical reason for the mistake. Right? Nothing is random, and every single thing can be explained if you have a curious mind, which is curious enough to investigate. Right? Example. So now you have the reason, you have the theory, and now a chart example of why this happens. Let's go to Euro. Step number one is the market poised to go higher, or is it poised to go lower? Let's go to the monthly. The monthly tells me that there's an inefficiency at this closing price and the 50% of the wick. And the astute pupil will recognize this 50% of the wick. Now, so the market is poised to go higher, right? Over here on the weekly time frame, we have reached a down close candle, which is on the monthly time frame an IFVG, right? For you to see. And we are showing a willingness to expand higher. We smack down into a key level on the higher time frame. We close above previous candles. And a mistake I saw a bunch of you make in Euro at this time was trying to short at this high over here and try to short at this high over here as well. If you shorted at this high over here, you made some money. Yes. Why? Because a signature in price, a very common theme and a signature of smart money is before breaking out of a range, a true breakout, you will usually find a sharp decline at the range high, right? So range low, range high, turtle soup. And before breaking out, there's a sharp decline and then it breaks out, right? That is something you will notice if you study ranges in depth, right? Before a breakout, what happens? That happens. So if you try to short this high only because it's a turtle soup, then you are wrong, and you are a turtle soup pattern trader, which is not what we are doing, right? At first glance, it makes sense. However, we are rejecting this low at a higher time frame key level. Right? There's no reason to be bearish at all. If lows are being rejected, then we expect highs to be broken, right? If the higher time frame, and note this down with a notebook, right? Stop casually listening, put down everything, and write this down. If the higher time frame is bullish, then the lower time frame highs will be broken and the lows will be rejected, and vice versa. And this is not some hindsight. This is something I called live on Twitter, as usual. That distinction has to be made. Now, that answers question number one, right? Which is, in summary, the mistake is you shorted at an old high and you messed up, or you longed at an old low and it kept going lower. Over here, for example, you bought here and just kept declining. Why? Because if the higher time frame is poised to go higher, and that is step one, which is determining, are we more likely to go higher or lower on a higher time frame candle? If the higher time frame candle is poised to go higher, then the lower time frame lows will be rejected, and highs will be broken. You expect manipulation, but what you get is distribution. It's a misread, right? Something you should reflect on and fix. Next question.
Also, another common problem people are facing is getting getting missed on their entries, like waiting for a high and then that high never gets hit, and it goes to TP.
Fantastic. So this is another mistake which happened right over here. Right? And as you know, I'm a higher time frame, relatively speaking, trader, which means I like to catch the beginning of the moves and hold until the end of the move, right? Which is why I have an entry up here on Euro. Right? That's my entry. At major swing points is where I look to enter. The question is
Getting missed.
my entry gets missed. For example, I expect a higher low to be swept, and it doesn't get swept. Right? That is that's a valid question, and the answer is SMT. So the mistake is missed entry, and the answer is SMT. One of the main reasons, right? Of course, the first answer, which should not be applying to any of you, assuming you're all advanced, right? The first answer should be incorrect read of order flow, right? But assuming everything is intact, you missed an SMT. For example, let's look at this one over here. So I like to use examples of charts I've called. That's some hindsight garbage. So over here, many people were expecting a third drive in Euro, right? Like, you should ask yourself, and it's a valid question, why is this low, why is this low left untouched? Forget everything. Forget all, forget all the ICT, forget everything. Why is this low, investigate, why is this low unlikely to get traded to again? In other words, why did I come and say I'm scooping up some euro down here? And you can go and verify it on Twitter right now. Why did I buy a euro over here publicly? What gave me the confidence that this low will remain untouched? Because that's a bold statement to make, which is this low is a stop loss, right? It's an area we are unlikely to trade to. Why? The answer is SMT. So if you're waiting for an entry down here, you missed it. Right? Perhaps you had this marked out, a previous high. And you're waiting for some sort of dig deeper, or you had the opening price of the weekly candle marked out, which are valid. But why would you abandon that as an entry point? A missed entry. SMT. Down here at this low, I haven't seen it, but I'm pretty sure there's an SMT down there, which deters me from
Also,
buying.
GU took the lows on Wednesday.
Yes. Right? So this is the reason why one asset takes the low, the other asset is expected to not take the low, right? And GU as well. As you know, each market has co-related assets. In case of Forex, it's EU, DXY, GU. Very basic knowledge. Right, so if you hadn't looked at both the charts, then you would have waited for this low to get swept, right? And that is, it goes back to another topic, which is rejection blocks. When do you use a versus when do you not use it, right? And another thing is, from a market making perspective, you have the classic pattern, quote unquote, which is a turtle soup, right? So everyone sold down here. You probably, and you shouldn't if you're following me, but this looks bearish, right? You would target these equal lows, but that's pattern trading. Smart money is buying down here, right? So it's manipulation. Everyone sold, dumb money sold, and the rejection block is taking out, sweeping the body of the candle, because when you have long wicks, then usually they will stop at the body. Turtle soup over here, failure swing, and SMT produced an expansion. The diagrams on Twitter for this one, if you give like a few days, there's an excellent explanation of this. Turtle soup. So scare them here, and then further scare them over here, and take off without them. Your confirmations are closes above or below levels. All right. Excuse me. So that's the answer. If you have a missed entry, right, you marked a level and you wanted to hit and didn't get hit, then it's either an SMT divergence or it's a misread of the order flow. Next question, Adam.
Also, one of the things yeah. This one was very common too. It's getting stopped out and then going to take profit. Hitting the SL and then the GP.
All right. So the mistake is my stop loss gets hit, right? And then it goes to my target. There's an analysis reason for this, and there's an execution reason for this, right? The execution reason is you had a stop loss too tight logically, right? Because if it, and I say this often, which is if you go back to your mistakes you made in your journal, and you should have one, you'll notice that a lot of times your stop loss was an excellent entry. The reason is you have an inadequately placed stop loss. It's too tight. You are getting greedy. A lot of mistakes in trading can be boiled down to fear and greed. FOMO, right? Those three things. So in this case, your stop loss is too tight. If you increase the size of your stop loss, then you would have a much higher strike rate. Next question, Adam.
Also, yeah. When does a key level gets hit two times? Like, when does it go to break even and then goes up?
Okay, so the
When
question,
to expect two taps of the key level and when to get one tap?
all right, when do I expect two taps of the key level? And when do I get one tap? This is a multi-layer question, and it has a multi-layered answer. The main reason, and how to actually get down to this, is understanding what times are more prone to giving you a violent trend. There are certain times of the year where the trend is expected to be violent, and there's certain times of the year where we expect chop, right? So and I'm doing some extensive research on these because it's not simply it's not as simple as it sounds, right? Because what you're trying to predict is essentially when to expect a V-shaped reaction from a key level, right? That's a themania, a V-shaped reaction from a key level, or when to expect an M shape, right? Because we know that key levels can only have three different types of reactions, right? And this one is another from the notebook. A key level can only have three different kinds of reactions: a V-shaped reaction, whatever it is. It's an OB, it's an FVG, it's a breaker, whatever. It doesn't matter. It's an 618 fib. They can only have this a V shape or a W shape or M shape, or it can have a multiple reaction, multiple touches, right? So the number of touches a key level has are as so. You want to try and catch these two as much as you can, right? And there is a method to time which one happens when. Aside from that, a double touch of a level on a lower time frame is one touch on a higher time frame. Because you always have to think about the fractal nature of price and how the higher time frame looks like on the lower time frame. So, for example, this order block. As soon as we closed above this, and this was a private trade I took, I gave you all a public trade right down here at this low, and I gave myself a private trade with a little bit higher risk to reward, because that's how it goes. So, for example, the alignment of all the elements of a high probability trade are present in USD CAD at this point last year. We close above the candle, right? So we're bullish. From now on, we're bullish. The novice trader will think that I need an instant reaction and to rally in one big candle up until these equal highs. That is not correct. Smart money needs time, right? When they produce such a signature, they need to accumulate inside the signature and then rally. So if I'm expecting this candle, this order block, to produce me an expansion, then I put the stop at the bottom of the order block. I mark out the 50%, and I wait for them to expand from this one specific candle, right? So why play around with the stop loss? Why wiggle around? And tight stops are a direct result of underfunding of the account. Let's assume you have $100 million under management, right? It's a relatively large amount. It's not the largest, but it's a decent amount to have under management, right? If you have $100 million under management, then the nature of the game requires you to have a wide stop loss. So I'm comfortable having my stop down here because I know that I'm going to get an expansion from this one specific candle. This one candle is going to be an expansion. So I'm expecting, because I've seen it happen millions of times, for them to accumulate inside this order block and expand from this order block with a 50% as a line in the sand. If they close below it, then I doubt the quality of the setup. Right. So this one specific candle is the candle I'm expecting to pay me. There are methods with extremely high risk and reward when you time the tops and bottoms to the second, even to the minute, at least. That is possible, but that requires an immense amount of skill. It's a very advanced topic. So most people, most of you listening right now, you are better off starting like this, using the zone as a stop loss, not one specific candle inside the zone, right? Write that down, which is using the key level as a stop loss. And when you see success with that, then you promote yourself, then you allow yourself the luxury of looking for a tighter stop loss. Because if you can't even succeed with this wide stop loss, then the chances of you succeeding with a tight stop loss are much slimmer. And wide is relative, right? This can be a 1 hour time frame. This can be a 15-minute time frame. Right? As you know, practicing on a low time frame is a good way to get in a lot of reps with the charts. So, and one more thing, excuse me, is pyramiding. So if you have a 1 to 5 over here, and then as soon as you have this fake order block confirmed, then you have another 1 to 4. Pyramiding is the pinnacle of the charts. If you have a price leg arranged, framed beforehand, so I have these equal highs, right? The seasonal tendency, the quarterly shift, everything is pointing towards a run towards these equal highs, right? Then the highest level of skill is milking all these candles on the way up by pyramiding, right? I have given you a massive clue in pyramiding through entry 1, turtle soup, entry 2, order block, entry 3, breaker. Right? That's an edge which no one else speaks about. And if they do, then it's from me. Right? They saw me say it, now they're saying it, as they have with many things. So, in summary, always expect at least a double tap with a turtle soup or failure swing in a key level, and practice with using the key level as a stop loss first. And then you move on to pyramiding and lower time frame, higher risk to reward setups, right? But step by step. There's no rush. This is a skill. If you take time to hone the skill of trading, then it stays with you forever. Once it clicks, once you master the model, once you truly understand your model, the one you choose for yourself, whatever it is, whether it's 3 a.m., whether it's 9 a.m., whatever. But once it clicks, then it's yours. No one can take it from you. I can't, even though I taught it to you, right? So put in the time to sharpen the blade. Right? It will never. You will never regret the time you spent honing the craft. Never. Excellence is always rewarded, and competence is always compensated in every field of life. And what's the final question, Adam?
Uh, Also, yeah, people are asking. Yeah, they say, how do I determine the higher time frame bias in narrative? Like how it's like the first step. How yeah, that's common too.
The higher time frame bias and narrative. First of all, you have to understand what is bias and what is narrative. Bias is where is price going, and narrative is why is price going over there. Right, and for that, I would direct those asking that to watch chapter 7 again. It is a gold mine of information when it comes to higher time frame bias determining, and chapter 7. In summary, focus on the highs and lows, the closes, and keep in mind, for those of you who are willing to indulge in the higher time frame trends, that every 3 to 4 months there's a shift in sentiment, right? And keep that in mind when framing a higher time frame bias. It's crucial. And practice anticipating what the next weekly candle is going to look like. That is also very important. Any more questions, Adam?
These were the common questions. Also, people were asking about uh do you call it trade management stuff and stuff like that.
Yeah, that was covered in the pyramiding just now. The
Ah,
pyramid.
yeah. So yeah, that's why.
That is covered. And another good way, another excellent method, excellent resource of narrative, especially why should price do it, is level 2. I saw a lot of you struggling. Not a lot. There's a bunch of you in the group chat. You were struggling with the concept, and Giuliano and Rich came and said that level 2 was a crucial element in understanding this one. I wouldn't say it's a critical element, but it certainly helps. It is a very good piece. And when it comes to framing a trade idea, that is the best piece of work I've put out. I will try and top it in this one, of course, in the upcoming weeks. As you know, we have the exam. coming next week. And the week after, I have another video, an extra video by me, which I'll be putting in this channel. So stay tuned for that. Anything else?
Also, for everybody else spamming me, I only ask the common questions, the ones that everybody wants answered. So if you're asking me why did I get missed here, Tuesday didn't hit the thing, you will get that from experience or from rewatching the other levels. So stop calling me. There are niggas calling me right now. So please stop.
I hope you're African, Adam, for saying the N-word.
Yes.
Fantastic. Okay. Okay, let me see the notes. Yeah, we hit all the topics required. If you have anything else you want to say, let me know. Any other thing people have been asking you? Any collective question which I may answer?
Also, people are asking level 2 how to join.
How to join level 2? It's on the website. If you go to romeospeculates.com, it's in the bio of the Twitter account. All right, so go to Twitter, click the bio. You'll see Master Turtle Soup and level 2 advanced over there. All right. Anything else?
Don't think so.
All right, folks. That went a bit longer than anticipated. Again, like with everything, rewatch it at least 3 times with a pen and paper in hand, because that is what the most successful mentees have done, which is be almost obsessed with learning. That's the only way. If you try and half-ass the learning process, then you will end up with nothing but another strategy you hopped onto and to another one. So be aware of that. I hope you found this insightful, and I wish you all good luck and good trading, and see you all in the exam next week. Good night.
Okay. So if other questions, they will be answered later. Okay. So this session is over.
One last thing before I leave, because I'm going to get my dinner right now. If you have any more questions, then ask Adam, right? And for the session, which is not the next week, the week after, I will have them included in his questions. All right. Good luck, good trading, and good night.
Okay. Goodbye. Take care. And guys, stop calling me. All right.